Hey everyone, my name is Andy. Welcome to Real Talk. Today we'll be reacting to a quick video. It's only 4 minutes long, so please bear with me. It's by a financial analyst, not a financial YouTuber that tells you, hey, the Fed just did this. The Fed just crashed the market. The Fed said they're doing this. And all this emotion back and forth drives me nuts. They have these thumbnails. No, it's nothing like that. This financial analyst runs a billion-dollar company. His name is Ken Fisher with Fisher Investments. Let's take a look.
Just be real clear about this because people don't get it. And this is more true now than normal. But the reality is that the Fed is almost always not very inventive, not really forward-thinking, but consensus thinkers. They tend to think mostly what everybody else kind of already thinks with a whole lot of jargon, and they're more political than they want you to think they are. Let me make the point really simply. To see that, all you have to do is look at 2022. As the year started, they were saying, as you may recall, inflation is transitory. Now, right or wrong, all kinds of people make wrong forecasts. So that they make wrong forecasts isn't necessarily condemnatory at all. In May, they said, or Powell said, Chairman, we're not even considering 75 basis point rate hikes. Not even considering. The next month they did 75 basis points, and in the next 4 meetings in a row, they did 75 basis points each. So what I'm going to say to you is that it is and has always been largely true. They themselves don't know what they will do. They themselves don't know what they will think a few months from now. What will it be? Well, I don't know. If they don't know, how am I going to know what they're going to think? But it is less important now than normally it's been because traditionally, most of history, not all of history, when the Fed hiked overnight bank reserve rates, federal funds rate, that raised the bank's cost of borrowing money. And since banks are in the business of taking in short-term money as the basis for making longer-term loans to finance those longer-term loans, that reduced the profit margin on lending, which reduced the amount of lending, because if it's less profitable, why does the bank want to do it? And then from that, said simply, when the banks start pulling in their loans and reducing their outstanding loans, that would cause economic contraction. When you have been borrowing from the bank and they say, give me back my bullets, and you give them back their bullets, you don't have the money to do the things you were going to do before. Finance inventory, finance growth, whatever it is. Typically, that leads to recessionary features, which is what everyone's been talking about. This time, unlike most times, because the banks are so overloaded with near zero cost deposits, the spread between that and long rates hasn't really gone up, hardly at all, as Fed's raised rates. And so lending has remained exceptionally robust. Rather than focus on what's the Fed doing at their FOMC meeting, look online monthly to see how much loan growth is increasing or decreasing, because it's loan growth that really matters, not the interest rate. We get confused by this because we assume that if interest rates are going up, that's really got to kill things. But it's really how much bank lending that goes on that does or doesn't kill things, not the interest rate. We think about that because we think of ourselves as borrowers. But in reality, it's important to think of demand and supply. And in an environment where loans are going up aggressively because banks are making more money on loans and pushing the loans out, you need to see that somebody's borrowing that money, and they're not borrowing the money to sit on it, they're borrowing the money to spend it one way or the other. And that isn't contractionary or recessionary. Thank you for listening to me.
Thank you so much for watching. Please like, subscribe. If you would like any information on the loan growth, do email me below and I'll update you on a monthly basis on what's going on. Other than that, hey, Hope you have a good day.